Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Sunday Roast. It's Sunday the 19th of June, Father's Day, and also happens to be my birthday, Kev. So I'm expecting a card. Well, probably be Monday now, won't it?
Happy birthday to you.
Honestly.
You were born in a zoo.
Yeah.
With the
That's
monkeys and
So what that
happy
means,
birthday
so I'll tell you what that really means going forward today is that I've got a free pass to pretty much do anything I like, but Father's Day and my birthday, you know, couldn't have timed it worse.
Right?
But ultimately, and so what that means is it's pub for a roast at 2 p.m. Happy days.
Happy days.
With the lads, not with the family.
Not with the family?
No, I'm joking. It's got to be with the family, but you know, you've got to try and get away with it.
No free pass. Yeah. My children came in to me on, I think it was Thursday morning and said, Happy Father's Day, Daddy. And I was like, it's not Father's Day till Sunday. And then my wife goes, oh, thought it was today. So she, because of her Egyptian culture, she was like,
it changes all over the world, doesn't it? You know, an American Father's Day is on a completely different date. We learned that when we were out there. There's you know, obviously different dates around the world. So what about, I mean, the weather here absolutely roasting this last week. And I had to go to Lido when I got back from Berlin. And, you know, just when things are going good, the government announces that the pool and Lidos a lot of them are going to close across the UK because of a chlorine shortage. I mean, you can't make this up now. Seriously.
You can't make it up, is right. Well, here it was absolutely stonking hot. It was like 43 degrees at the start of the week and then slowly got a bit cooler. Now it's in the mid-30s, so it's not so bad. But we have a pool, so all is good. And even if we didn't have chlorine, I'd be in it. Yeah. But there are some things that you need on there. You know, there are some things that you need, like especially when you want to draw something or what is that stuff that you need for drawing stuff or painting a house?
Well, it's graphite, isn't it? And you mean rutile? You're talking about painting? Yeah, rutile.
About rutile, yes.
Titanium dioxide, yeah. That brings us on to our special guest this week. We're joined by Sapan Ghai, Chief Commercial Officer of Sovereign Metals. Welcome, Sapan. How's things?
Yeah, not too bad, Phil. Happy birthday.
What do you mean, not too bad? Have you seen the share price?
Look, I didn't say they were great, did I?
Not bad, he said.
Look, let's just explain. Sapan is the nice guy, okay? But he needs to be angry about this.
Oh, there's anger somewhere, Kevin. Don't worry about that. I mean, look, the market is what it is, but it's difficult to understand off the back of our RNS this week just why you would be wanting to sell down Sovereign unless you got to pay the gas bills or something. Keep it in your back pocket is what I'd say.
And why would we keep it in our back pocket?
Oh, look, so let me just run through the highlights on the RNS very quickly. What this RNS was, it's the results of our scoping study. So December 21, we had an initial scoping study that said if we were to mine the resource back then, we would have a net present value of our project Kasiya in Malawi of about $860 million. In April this year, we announced that we've tripled the size of the resource, and that made us the biggest rutile discovery ever on the planet. It made us one of the largest graphite deposits in the world. So it only made sense for us to go ahead and see what that same scoping study would look like, but on the new resource. And the numbers were just outstanding. We're talking an after-tax NPV of over $1.5 billion. So that's an 80% increase in your net present value of the project itself. The after-tax IRR, 36%, very nice and robust. So what does that mean on an annual basis? Well, this project will be throwing off an EBITDA of over $300 million a year for 25 years. That's not a bad gig to be in. And all of this on the back of a capex to first production of $372 million, which is only 12% higher than where it was in December. And most of that 12% is basically inflation.
So let me just ask you the question about the after-tax NPV 8. What does that actually mean to people? Because that's just the net present value. The total value of the project is what?
The net present value is the value of you standing there once you've got all your studies done, you've got all your licenses, you're standing on the edge of Kasiya and you go, right, I can put $372 million into the ground now. And what's that $372 million going to give me back? And what it's going to give you back is $1.5 billion in today's money.
So the MPV 8 means what? What does that 8 mean?
So the 8 is the discount rate. So we've discounted all future cash flows at an 8% discount rate. If you were to discount it at 10%, you're not so comfortable with African risk. You're saying maybe these guys get funded, maybe they don't. I'm not too sure. So I'll take that instead of that 8 that they're putting in as headline figures. I'll go with 10. We've put that in the study as well, and that's still well over $1 billion.
And an average annual EBITDA of just $50 million a year, less than the total capex to first production.
Exactly, which is why we get paid back just over 3 years into a 25-year mine life. Now, the crux of that 25-year mine life is this. We set it at 25 years ourselves, but in those 25 years, we've only mined 30% of that resource figure that we put out back in April. So there's still 70% of the resource sat in the ground in 25 years' time if you were to follow our plan. The reason why our scoping study only mines 30% is because we wanted the capex number to be what I call bite size for a company the size of Sovereign Metals, i.e. we're not going to be, today's market cap around £100 million. It would be silly for us to go and tell the market, well, if we spent $2 billion on this project, it would be worth X, because everyone would know we would never spend $2 billion on the project. But we can quite happily go to investors and say, look, if we were to spend $372 million, which is eminently financeable, we could get $1.5 billion back.
Okay, so what we're basically saying is that if somebody gives you £1 with this project or $1 with this project, that they're going to get $4 back.
In today's money, yes. Obviously, in real money, that would be a lot more and spread over time, but time value of money, corporate finance 101 and all that, yes, that's basically the crux of it, yeah.
I don't know really much else to say because we've got the biggest rutile deposit in the world. Everybody needs rutile. We have one of the biggest graphite projects in the world, and we've already discussed this in another podcast, which was talking about the type of graphite you have, which is what all the batteries that have or that are required for the EV vehicles. Most of the graphite you have is this. You have extremely low operating cost. Have you got anything else to say?
Yeah, I just wanted to correct you on the third point. We have the lowest operating cost now as of release of this RNS. We pitted our production costs for the graphite against all other graphite players out there who are looking at producing graphite concentrate, and we are the lowest number out there at $320 a ton. In fact, if you actually look at the maths of it, and you said part of that $320 a ton, because that's $320 per ton of product, so that's both rutile and graphite, but you say actually a lot of that cost belongs in just getting the rutile up to a certain spec, because the graphite then comes off towards the end of the process. That incremental cost is only $140 a ton, versus an average in the market of about $550 a ton.
Okay, and give us an idea what's been happening with the rutile price and the graphite price.
Yeah, look, so on the rutile price, current spot is well over $2,000 a ton. $2,200 is the last quoted current spot price. In our model, to get these numbers, we used $1,250 a ton. It's a very conservative long-term price there.
So you're telling me the MVP should be more like $2.5 billion to $3 billion on the current
We've included we included a sensitivity for that reason in our sensitivity analysis in the RNS, and you can go back and look at if this happened and if that happened, what would that mean? And I'm sure it would throw up some very interesting numbers for you. And we did a very similar thing on the graphite side, right? So the current equivalent spot price for our graphite basket is about $1,200, and we used the $1,085 on that side as well, just to be very conservative. Now, we've been almost doubly conservative because we've been conservative on the CapEx and the OpEx because we've built in a lot of inflation, but we've been just as conservative on the pricing because we haven't built inflation into the price. Ultimately, if your input costs are growing because of inflation, if you're a mining company that basically produces the raw materials that are being inflated, then you'd expect your revenue number to inflate as well. But that's by the by. What we've put out there is quite a conservative set of numbers.
Yeah, I mean, you've got, just looking at the two, what I would define, and they are defined as critical metals now, both of these, rutile and graphite. The former, rutile is already, as we talked before, is in structural deficit, with obviously global supply declining by, I think it's about 45% in the next 3 years. And then you've got your graphite, which we know the demand is expected to increase for that because of EV and everything. And they're saying that electric vehicle production is obviously, the forecast is expected to jump something like 12-fold in the next 15 years. So ultimately, it's the right time now. And if you look at the operating costs, it seems like you're poised, ready to go. You're almost future-proofing yourselves, aren't you?
Absolutely. Look, both our products, both the rutile, which is the purest form of titanium that occurs naturally, and our graphite, they're both considered critical raw materials by the US, by the EU. And that's a combination of their scarceness, the control of supply chains by China, and that's the requirement for both those metals in transitioning the global economy towards decarbonization. So you can understand why everyone wants these products, both rutile and graphite. And then, as you said, rutile it has been in deficit since 2017. There's been no real rutile finds of note for about half a century until we literally found Kasiya. And so the graphite on top of that is just a massive bonus. Yeah. At a time where obviously battery metals are such a big thing.
So talk us through what potentially, again, I'm not asking for a forward-looking statement. What are some scenarios that may happen now moving forward with getting this funded, with getting the into production and actually getting almost an off-taker in place maybe?
Yeah, so look, on the off-take side, discussions are ongoing. We're hoping for MOUs to be coming out in the next... or announceable in the next couple of weeks or so. Drilling continues on site because even though what we found is like, I put this stat out a number of times, but is 1.5 times the size of the city of Manchester, it's still open, and we're still drilling around it, and we're still finding more mineralization. So that doesn't stop. We're also obviously proving up the resource that we do have, so moving that from inferred and indicated resource categories upwards through the chain into proven and probable, hopefully. A lot of work's going on in the background in terms of the graphite test work. What does our graphite look like? Ultimately, if it ended up in a battery, what would that battery do? So that's quite interesting work that we are planning. And then the final push, I think, for us is as we work towards a PFS, which we're hoping would be out there come Q1 next year. A lot of the work is around proving up the low carbon factors around both our products. Right, the rutile. If our rutile ended up in a pot of paint versus some of the alternatives, you could save up to 35% carbon emissions. If our graphite ended up in a lithium-ion battery versus some of the alternatives, you could save potentially 99% of the CO2 emissions to get that graphite there in the first place.
And also, as we mentioned before, I think that a vast amount of the power is going to be supplied by renewable hydro and solar, giving the mine itself, obviously that's going to reduce the carbon footprint going forward.
Exactly. Look, all the power is renewable. There'll be a solar farm built over the fence to source 28 megawatts of power. That could deliver 100% of the power during the day and early evening when the sun is up. The rest of the time, we'd be jumping on the grid. The Malawi grid is actually hydro-powered, so you've got 100% renewable power going into this project. So
one of the other things, just to recap on the low cost, basically the low operating cost, which is something that really does, when you read the RNS, that's the sort of first, obviously the MPV is amazing, but the low operating cost and reduction in that, higher margins. We talked about the deposit size. I mean, you mentioned it yourself, 1.5 times the size of Manchester, which is a big old area. You've got zero strip ratio, which we talked about, and poor of that soft friable high grade mineralization. And then the amenability to also hydro mining, which is what we talked about that on a previous podcast, and just how easy it is to get this away from the surface. It's not, deep drilling where it's going to be expensive. You've got to plan all your drills. You've got to do seismic. It's literally very easy to get away from the surface using hydro mining techniques, conventional processing. The location's easy. And obviously as well, we've talked about in the past, the low transport costs. So it's really got everything going for it, this project.
Oh yeah, look, absolutely. We're so lucky that mineralization, and funnily enough, the higher grade stuff is right on surface. So you move away the soil. You can do it with your hand if you really want. Move away the soil, and there you go. There's some rutile mineralization with some graphite in there, and there's your supply of critical raw materials at a low carbon footprint. And you're right about the transport costs. I mentioned the prices that we've used before, but if we look at the current spot prices of $2,200 a ton for rutile, and it's costing us just over $45 to get it on a ship. It's not actually that material.
Sapan, so there's some exciting news in terms of shareholders and the shareholder base. One of the institutional investors has increased their shareholding. Can you tell us a bit about that? And obviously maybe some dealings with them about why they feel so confident in holding such a large portion?
Yeah, so you're talking about Sprott here. Sprott are one of our major institutional shareholders. They're a North American-based fund, predominantly in the resources space, been around for donkey's years, and they're all very au fait with the mining sector. They have been huge supporters of us. From a very early stage in the rutile discovery of Kasiya. And yeah, as you said, this week there was a market announcement that they had increased their holding on market from around 10% to 12%. So they're clearly seeing some value in the stock and at the price that it's at.
That's great news. I mean, 12% is not an insignificant amount, and an eighth of the company. And these guys are obviously long in the tooth in terms of mining, so they understand that this is, I presume, what we've been talking about, pretty low risk, high return project, which is what they're after.
I mean, Sprott are very well respected in the mining industry or the mining investment space, aren't they? With especially in the gold sector as well. So that it's a good investor to have on board, I guess.
Yeah, a little anecdote for you guys is when I first bought this house a few years ago, my house, the windows were shockingly bad. So I needed them all firstly washed down. So I called the local window cleaner and said, could you help me sort out my windows? And we got chatting. And he turned around and he goes, "Oh, what do you do?" And I said, "I'm in mining." And he said, "Oh, mining? Yeah, I take a dabble in mining stocks every now and then. But I'll tell you what, I'll invest in anything that this guy called Rick Rule's in." And Rick Rule was obviously one of the head honchos at Sprott. He's since moved on, but Rick only a few weeks ago was on Bloomberg Network News and punted Sovereign Metals as one of his top 3 stocks. So brilliant. I hope the window cleaner's listening.
Rick's great. He's a larger-than-life character, isn't he? I love listening to some of his YouTube rants, and so, he's a very interesting character.
Yeah, no, it very much is, and obviously has a very good track record in the mining sphere. So we're glad that he's a backer.
Looking at all the figures, this is not going to be 10 years from now. This is going to start coming out the ground. I looked at it, and it shows 3.7 years is the payback period from start of construction to actually the stuff coming out the ground. So, the scenario is the construction side of things is not going to be a big deal. I presume it's going to take a period of time, but not a lot, probably just a year or just over a year to get the thing going once the finances are in place. Do you envisage that the offtake agreements will involve some sort of financial help or assistance to set the mine up?
So look, on the capex, both the first production capex and then the second plant that comes online. The second plant is fully funded through internally generated cash flow. Capex for the first production, that 372, yes, we'd need to finance that. And yes, we would suggest, like any other industrial metals or, esoteric type of minerals that are used by a number of end users and sometimes even go through the hands of traders, you'd expect. In a market where everyone's vying to get this stuff, people would be more than happy to help us with the financing of the project to actually start that production up and running.
You said it to us before we started recording, I think, but if I was going to invest my money in a project that seems to be confirmed low risk in something that basically the world needs this, both the rutile and the graphite, why wouldn't you go for the world's biggest project?
Yeah, I think the reality is whoever is producing rutile and graphite out of Kasiya at the kind of sizes that we're talking about, or maybe more, they run the low carbon titanium industry from a supply perspective, and they become a major player in the battery metal space.
Yeah, and also just to finally say, as you said, the 25-year mine life is using 30% of this resource. If you were to increase production by double, then effectively you're still only going to use 60% of the resource. And I can envisage, maybe this is too far ahead, but 5 years from now, when this really is required and in a lot more demand, that is very feasible that's going to happen.
And look, that would just be a function of where the prices of these commodities are most likely headed, just given their scarceness and their requirement for, as you said, future-proofing everything around us.
Yeah, Sapan, as you were on the Sunday roast a couple of months ago, you did tell us that it was one of those pubs in Birmingham that gives you the
mixed grill,
the mixed Indian grill, I think it was, and a pint of beer. So now we have to ask you, what are you going to have for your midweek takeaway? What's the takeaway?
Oh, that's a good question. Midweek takeaway, anything from a cheeky Nando's.
a cheeky Nando's.
Cheeky Nando's.
You get the cheek of the chicken, don't you?
Well, the interesting thing I always find from a lot of people about Nando's is they go to the gym and then they go, oh yeah, I need some protein, and a good way of doing that is Nando's, and they forget about all the sauces and the bowl of chips on the side. But you know what? That's why I call it a cheeky Nando's.
Cheeky Nando's, not a cheeky Chinese or a cheeky kebab. I keep dreaming of that really dodgy kebab meat. I'm afraid it's can't get it here.
After your week with food poisoning, mate, I can't believe.
Don't talk to me about food poisoning.
I can't believe it's even entering your mind.
Projectile vomiting and all at the same time.
Sapan, always a pleasure to talk to you, and we wish you all the best for the project, and we'll look forward to having you back on soon.
Thank you very much, gents.
Thank you, Sapan.
Yeah, that was really good. It's always good to chat to Sapan. I always get a good feeling about this one. I just can't believe how cheap the share price has got from the news, on the announcement when they had the first trading halt on the ASX, and it rose from about 30p to 50p in a matter of hours on the announcement that Kasiya is now the world's largest rutile deposit. And then you get the news this week that, again, there was another trading halt, and then they get the updated scoping study, which has added another 80% onto the value of the project. All the operating costs have been dropped down. They've proven that it's going to become the lowest or the cheapest graphite mine in terms of capex. It beggars belief that this one has dropped from the 50p highs or 54p highs down to the 20, 25p, 27p mark that it is now. It just seems like how much value is in this. And then with Sprott taking 12% of the company.
Up from 10 till 12%.
Rick Rule is the man who, and he tipped it. And again, we'll put the link into the podcast. You'll be able to see that in there. Have a listen to Rick Rule recommending sovereign metals as one of his picks. So for me, it just offers a great opportunity at the moment to get into this for just somewhere to put your cash for the next 3 to 5 years.
A net present value of 1.5 billion based on extremely low prices in terms of both the rutile and the graphite. That net present value could be twice that, I think, without stretching it, because they've used $1,300 for the rutile. It's currently spot price $2,200. And the graphite, I think they've used $1,085, and the spot price is currently $1,200 or $1,300. So, but the graphite is very low production costs because it's basically coming off as part of the process to get the titanium oxide out, the rutile. So, yeah, I think it's a bit of a no-brainer. If you've got a company with a current market cap of £100 million and over a period of time could produce, literally several billions. I mean, that guy was talking about companies. He only likes companies that have potential for $10 billion or more to come out. And don't forget, he was also talking that 25-year mine life was only 30% of the full resource that's actually there. So, if they double the size of production, all of a sudden you've got a 5, 6, 7 billion pounds of resource, still 25-year mine life. You treble production, you do the maths, it's like going up to $10 billion or more. So, yeah, the potential is outstanding, I think, outstanding. Yeah. So, yeah. So what's been happening this week then, Phil?
Yeah, I mean, the other outstanding bits of news we had was from Orcadian Energy was this week that related to the seismic acquisition and licensing agreement. The news came basically explaining that they'd done a very good, it looked like a very lucrative deal in the fact that basically that they've deferred the near-term costs for the seismic and licensing, and any future payments to this company called TGS would largely derive from a 1% royalty on production. So it seems like a great way of acquiring extra. I think they've gained access to something like 2,070 square kilometers of newly reprocessed and interpreted 3D seismic, obviously covering their pilot well, but it also extends onto the on another 100 square kilometers of new seismic on the Elk and the Narwhal discoveries as well. So, and again, that's subject to pilot FTP approval. So it looks like a very good deal. Orcadian, as we talked about in the past, have got 79 million barrels of 2P reserves in the pilot, and then they've got another 78 million barrels of 2C resources in the Elk, Narwhal and Blakeney discoveries, and 191 million barrels of prospective resources across its Western platform licenses. So for a company that's got a market cap, in the 20 millions, it's roughly about 27 million market cap, with that amount of 2P, 2C, and obviously other prospective resources, then it seems like an absolute no-brainer, especially in this current cost of energy. We're in the fuel crisis. Why aren't we turning to our own homegrown UK-based North Sea oilers in this current crisis?
Orcadian had a broken out from WH Island, which was already, I think the old valuation was 115 pence. Broken out fair value, and it's currently trading at 44 pence, I think it is. And they've upped that to 260 pence. So, we're going here from 44 to 260 pence. Let's assume that they're not exactly right, and that broken out is not hit. But I mean, surely it's got to go some way towards the £2.60.
Yeah, I mean, I think they were using a value of $75 a barrel on the last note they did, and now they've obviously upped that to $100 a barrel, and that's fair value based on the fact that we're around about the 125, 130 mark at the moment, of course. But obviously, that and talking to Steve, I think we were pretty sure that the new baseline is probably $120, right in this current crisis.
Yeah, how long that's going to last, anybody knows. But even if you go down, if they kept it at $75 per barrel on this note, it still would have gone up because of the things that the government has changed in terms of the funding, I think, and the ability to fund.
I mean, rather than just going through RNSs, obviously, it's nice to talk about the market. We know it's a pretty turgid market at the moment. It has been like this for the last few months, and it seems to just be getting more fearful as the days go on. Now, at what point do you think that, the first question is, has it changed your investing mentality in looking for companies that have got real value in them now? Have you changed how you will invest in the last sort of 6 months to a year?
I think so. I think I've started to be less risk orientated and more, I want to see the actual reality of what's going to happen. Maybe trying to invest in projects who I think have got maybe not too long to go before they're going to have revenue, or they're already in revenue. Whereas I think before, I was quite happy to take something at the stage where it was just a shot in the dark, let's hope it works out. And if it works out, it'll be an absolute moonshot, it will be flying. So I think, yes, I have changed. I haven't changed my sectors, if you like, because I still think ultimately the resource sector, the EV, metals and precious metals are going to do very well. Copper, gold, lithium, the rutile, the graphite, all of those things I think are going to excel in the next 3 to 5 years. And maybe it's more likely to be 1 to 5 years, because I think the penny is going to slowly drop in the next while, that these things are of great value.
Sure, yeah, no, I agree. I mean, I think it's changed I think gone are the days where these shares that have got no fundamentals, do the moon in a day and stuff. It's certainly not going to happen in this current market. They may come back. We never say never, as you say, but I think you're right. I think it's changed my mindset of looking at a company that's not necessarily EBITDA positive now, but has something on the horizon that will be an event, that EBITDA event where they will be profitable, and actually looking forward to a company that's got strong assets, that's got a low capex, that's got the operating costs are low. Someone who's going to want to come on board, whether that be to joint venture it, farm it out, or even earn in however that investment may take place, or even somebody may want to come along and snap that asset up for even a slight premium to the current price. That ultimately is what we're looking for.
Well, we had that perfect scenario, didn't we, this week? In two different things, I think, and both in metallurgical coal. The first one was on Thursday with Contango, who basically signed an offtake agreement, and there it is now. It's done. $10 million per annum EBITDA minimum, and now a market cap of 16 million. Now that doesn't add up. It just purely does not add up. You use a PE of 3, 4, 5. Let's use 4 to be very conservative. You're talking £40 million or $40 million, which on the current exchange rate's £32 million. It's twice its current market cap. So fair value for that right now should be 11p, absolutely, with nothing factored in for any increases. And we have spoken to Carl on Friday, and that will come out on tomorrow. And so that was one. And then the other one, which has already followed that path but is continuing at a rapid pace, is Ben's Creek, which this week came out with, again, great news. It's now showing that it can mine for the next few decades at this 1 million tons approximately a year. and it's going to be EBITDA positive and extremely cash generative for the foreseeable future. And when we took that one on in October, when we started talking with Adam, that was a pipe dream. That didn't exist, but we understood the infrastructure he had. He had the cash to do it, and he's executed it in that period of time. So by the time that company is a year old, it will be annualizing money of probably $200 million a year. Now, there's been some positive things about that, because ultimately the coal price has increased quite a lot. And he's had some great purchases of land as well, which has allowed him to increase the reserve that is there as well. But now he's got a $1 billion company. He has a $1 billion company. It's just not worth $1 billion at the minute. So, you know, there you go. People will catch up, I think, once the revenue starts coming in. So we've got one there, which is at the start of its journey, and another one which has gone through that period of 9 to 12 months and is coming out the other side. And they're both going to be good investments, I think. What do you think?
Yeah, I agree. I think that they've both got massive potential. They've both still got a way to go. You know, the offtake news this week was brilliant for Contango. I think everybody's just been waiting with bated breath. You know, what's going to happen? When's the offtake going to come? Finally been delivered. Carl and the team have done very well. And yeah, I think they're both boys. I'm a bit shocked about the way, you know, Ben responded pretty. I think he dropped down to 63, 62 or something this week, which has been a bit of a shocker for me. It seemed to held very well. And I know there was a shake earlier in probably 8 weeks, 6 weeks ago, a month ago maybe, where it almost looked like an orchestrated raid. Like there's a lot of stop losses that were triggered, and it fell from like 90p to 60p in not long. It was a very wild swing, but it did bounce back and recovered well. But I'm amazed that it hit 108, whatever it was, the high 19, and now we're at the 70p range, and you're thinking to yourself, how much more? You know, the trains have gone. He's had 2 deliveries. The third one's going to, it's going to be on the way. That's all gone. The railroad's been proven. There's been so much naysayers on there. The trains aren't real. It's not happening. Then there was uncertainty regarding the permits, which obviously was cleared up by Adam this week. We had a really good chat with him about the permitting and the amount. There was obviously the full JORC report that Marshall Miller is going to be, that's still yet to come. So actually that will see your contingent, you're proven, and actually give you a proper figure in terms of the actual resources there. So yeah, it looks strong as you like, but I'm very disappointed in the one share that has really been the golden one in the last sort of 6 months has taken a breather. Now, yeah, consolidation's healthy. We know that. We expect it's part of the journey. Nothing goes up in a straight line, but I'll be honest, I would have expected this to be way over the pound and sitting there solidly on this amount of revenue and EBITDA that's actually coming out and being, money that's being generated.
Yeah, no, absolutely. If you've got, in a matter of 2 months, the annual revenue that's coming in from Ben's Creek, or not revenue, sorry, EBITDA, should be in the region of $200 million EBITDA, with probably close to $400 million of revenue that's being produced. So any company that's certainly US based that would be on the US stock market, that company would be worth probably, I reckon, 2 million plus, with no legacy issues, nothing else. Now, obviously we're banding big numbers about here, but I think this is the case. But it seems to be on the UK market, everything has to be proven before people will pay the price. And whereas I always believed, anyway, maybe I'm wrong, that markets were forward-looking things. And, you come back to the fact that the state of the market is not good. Well, we looked at the greed thing last night, didn't we, when we were having a chat. Now, this is based on the fear and greed index, which is based on the S&P in the US, okay? So we can't say it's for all markets right now, but effectively the fear is 0, if you like. So if the reading is 0, it means extreme fear. If there's reading is 100, it means extreme greed. And we're now at 13. That is in the extreme. 0 to 20 is extreme fear. So there's extreme fear out there right now.
What's the reason? I mean, you're going to have...
Yeah, but it's at this point now, at extreme fear, where lots of things capitulate, lots of things go down that shouldn't go down. And you need to keep your wits about you and say...
Yeah, I agree, but I think that...
Is now going to be the time.
The problem
soon
is we're in a completely different era. I agree. Like if you look legacy, now is the time that Warren Buffett would be going, right, I'm loading up on these stocks. But it seems to be, and this is just what I'm, observing in my opinion, is that for every stock you think, oh my God, this is the bottom. And then you say you add a position at that point and it continues to retrace. And it's been continual retracement on a lot of these shares. And you think, I'll say to you, this is going to dip below this amount. And you'll go, nah, I can't see it. And then, a week later, bang, it goes. And I'm like, yeah, because the market, the market makers are clearing up. The fear is there. People go, I need to get out. I'm at break even, or I'm at 20% loss. I get that people will, the growth mindset will dictate that if you're not happy with the stock, you sell it. And some people will be selling out at a loss. So those who are willing to sell at a loss, unfortunately, are going to take the stocks down because market makers will take the stock, or if they don't.
Yeah, but if you want to buy any volume in any stock, I mean, a good example here was Kyler Hardy for Cloudbreak, the CEO. He obviously saw his stock down at below IPO price again, having been up at 10, 11, 12p only a matter of months ago. And he came in and bought 2.5 million of his stock. So that was like 0.5%, more than 0.5% of the company, I think. And the current price when he was trying to buy was 2.6. He had to pay 3p. That you cannot buy a reasonable volume of stock at the prices that are being dictated at the minute. You can't buy big amounts of stock. Look at Ben on Friday. Ben went from opening at 70, I think it was, complete slut drop to 62p, and then has finished at 72, 73. I don't remember the exact figure that it finished at, but that this is just market makers taking the mickey. And I mean, can and will Ben go back to 80 or more when there's a bit more stability? Yes. Should it be worth over £1 on fundamentals now? Yes. The same, I would agree now with Contango. It's a ridiculous price now. It really is a ridiculous price. It should be worth twice what it's worth right now. On the fundamentals, they've signed agreement to say they're going to produce 10,000 tons of clean coal. That's it.
Yeah.
So, I mean, there are many anomalies now. I mean, we talked about sovereign metals, obviously, that's been on today. Price goes down when they put the study out that says it's gone up 90%. I mean, what's that all about?
Yeah, I mean, what's causing that fear? We know what's causing it. Obviously, there's rampant inflation. You've got the UK following the US by hiking the interest rates. I say hiking; they're still ridiculously low. They should never have dropped below 4 or 5%, in my opinion, 15 years ago when they were back at the level that we hadn't seen before. Having 0.5% or 0.25% is ridiculous. There's no return. There's no what's the word, reward or incentive is probably the right word to save in the UK when you've got interest rates at 0.25%. Yes, it's good for lending or borrowing. Yeah, it's good for borrowing if you want a cheap loan or you want cheap finance. Fine, but it doesn't really help the economy, does it? Because it's not real having interest rates at 0.25%, is it? So I think there's a whole host of reasons why is there no liquidity? The reason there's no liquidity in general is because people are fearful. We can see that from the greed. Inflation's high. The pound isn't buying. They say you need to earn another 25% to be able to be in the position you were, 6 months to a year ago. In other words, if you're earning $3,000 a month, you need to be earning $4,000 a month after tax to be able to buy and maintain your lifestyle that you had. Fuel's gone up. That's not even classed. Food prices are generally not classed. So the inflation figure at 11% or 9% in the UK is nowhere near the real world figure because a lot of things are not even considered into that, like food, fuel and things. So I think ultimately, it's a cost of living crisis that the people are feeling the pinch, and then they don't have the cash to go, I'm going to bang 500 quid into sovereign metals. I'm going to put $1,000 into contango. The volume is not there. People don't have the luxury of being able to go, I can forget about that money.
Well, either they don't, or they also don't want to, because they don't see that there's a positive return on that money in the short term. In the long term, those things are going to do well. I'm fairly convinced of it, but and things can go wrong, but I think it's limited what can go wrong in most of those situations now. But yeah, I mean, you're right. I mean, I went for breakfast with my wife and kids on Friday morning, and we go to a traditional restaurant, and it's not expensive, and but I think the bill was probably twice what it was a year ago, for the same stuff. So it is, everything is going up in price, and people are struggling. But when you look at what's happening with the Fed is basically saying, we're going to put interest rates up, and it had a real sea change in its last Fed meeting by increasing it by 0.75, but that really wasn't the shocker. The shocker was that they changed from having a 0.75 to 2% aim for the end of this year to 3.4% interest rate by the end of this year, to try and normalize rates in the US. So don't be surprised now that we've got a range, I think, 1.5 to 1.75 in the US now. Effectively, they want to double that again by the end of the year. So we've got to have, in the next 3 Fed meetings, I think, is it August, October and December, I think, we've got to have another 1.5, 1.75 increase probably from what they're leaning to. So you would have thought that would have spooked the markets, but the markets actually rallied on that interest rates were going to go up. So it's bizarre. The dollar fell a bit, even though 0.75 was added to the interest rate. Crazy. That just tells you how overvalued the dollar is, because the dollar, for me, is just crazily valued. And that's a fear thing. Everybody has ran to the dollar on fear, and that's what's actually holding a lot of the US economy together, is the value of its dollar is helping it a lot.
And all the while, the UK, the pound is completely weak. Weakens every day. I think there's a massive amount of shorting going on against the pound. We talked about this a few weeks ago, and that obviously isn't helping. So in reality, the pound's getting weaker. The dollar seems to be getting stronger, even though we're in a very similar situation. In the inflation is around about 8.6% in the US, 9% in the UK. So very similar. They've just hiked. The Fed have hiked it up by about 0.75%, which is a bigger increase than we've seen here. But ultimately, I feel we're in a very similar. We're probably in a better position in terms of debt, than the US. Wouldn't you agree with that? In terms of, look at their bonds and the yields and the amount of debt that they have to service. I think we talked about this yesterday, that even just that percentage of debt they have each month on that trillion, the trillions and trillions that they've printed, they can't even service that debt.
If you estimated the interest rates to go to 3.5% or 3.4% that we were talking about, then I think the tax receipts are struggling now to cover the interest on their debt. So that's a scary situation, isn't it? It's like,
there was a very interesting video.
You're having an interest-free mortgage, isn't it?
There was an interesting one you tagged me on about Japan, and this is a whole new story about the US bailing the Japanese bonds out, because they're actually selling bonds at break even with 0% returns, effectively, which is unheard of, because you'd expect 2 to 3% a yield on a bond, right? But they've been taking these bonds at 0% just because they have to. It was like a mandatory bond, effectively, that was enforced because of the contract
in Japan.
In Japan, so
the companies and the pension funds have been mandated that they have to take 10% of their assets as Japanese stocks.
Oh, Japanese bonds. Yeah, exactly. So
then from that money, They then buy US bonds.
Yeah, exactly. And now they're in a position where I think that the US bailed them out to the tune of about, was it $1 trillion or something ridiculous like this in the last 3 months?
3 trillion, I think it was.
Wow.
So, the world's in a mess, but we don't know.
Time bomb. I don't know how they're going to deal with that one.
Well, this is what a lot of the crypto people were talking about, isn't it? They're basically, is the US going to create its own digital currency and make it the world currency, and that'll be the end of it.
I mean, the interesting one this last week was it Celsius was one of them, the Bitcoin platforms, a bit like Coinbase, but in the US, they basically froze everybody's assets and said, you cannot get out of the coins and put an announcement out. I mean, people said that, have said they love the flexibility of these cryptos, but actually there's been a few now, I think one of them called Coincilium anyway, there's been a few now in the US that have actually told holders, you cannot sell your coins and any sales are not going to be allowed.
Yeah. And if you're not on a registered exchange, which none of the cryptos are, even Bitcoin,
non-regulated, yes.
Non-regulated, then people can decide whatever they want to do. So they hold your assets and they can do whatever they want.
I think there's an element of people have been burned on crypto in the last 6 months because a lot of the money from these nanos, from the AIM casino went to crypto, and people, they got burned, got pulled in on these things, got rugged, and ultimately now that they're hurting from it, and they don't want, once bitten, twice shy. Why would you go back into small caps or nano caps after losing your shirt on cryptos?
It's possible, but I will say to anybody who's been in that situation, then now or in the not too near future, I really do believe that there's going to be quite a bull run in small cap resource-based stocks. I don't know. It might not be for a few months. It might be a few weeks away, but it's coming. It's coming. I'm sure of it. It's like the value's there. The value is being created in the companies, but it isn't being showed yet in the market caps of these companies. So it's coming. Just don't know when.
Well, I think we've put the world to rights now. We've gone through a few.
We have.
Anything else you want to add? I mean, I think other than
just again to say happy birthday, Phil, and I hope you enjoy the rest of your day.
I'm going to be off to the pub in a minute. I'm going to go for it, even though it's probably too warm it's cooled off a bit the last couple of days, so actually it's not too bad. We can enjoy a roast at the local with some friends. I'll have a glass of a red or two for you, and we'll speak soon.
Enjoy.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.